Hey everyone, I'm Gagan Mack. I'm the Director of Product Management at Circle, and I work on developer experiences and Web3 services that we're going to announce very shortly. I also focus on stablecoins growth. And I feel like my career has been prepping me to come and talk to you guys today. It's going to be very conversational. I'm going to ask you a few things along the way. Before Circle, I actually worked on programmable SMS and programmable voice. And then the idea of programmable money has been around for a while. So it was fascinating me. My curiosity in economics and finance drove me to work on this. So before we start, I actually also want to give a shout out to Sam Tapalia. He's the founder and CEO of Zebec. He's going to be joining us along the way. And we'll talk a lot about the idea of programmable money, applications, some applications, sample applications, and then what we are going to do to build next. Before we go into any of that, though, I want you guys to watch a clip from one of my favorite comedians, John Oliver.
We're going to look at one of America's most resilient industries, payday loans. 1 in 20 households have taken one out at some point.
There are more payday loan stores in America than Starbucks and McDonald's.
More than Starbucks or McDonald's. McDonald's! I didn't know there was more of anything in the US than McDonald's. How much might a company charge for this sort of service?
Some of those rates legally are as high as 1,900% a year.
1,900%! Even the most demanding, abusive football coaches only ask for 110.
Every payday, I was here.
Every time I got paid, I would pay it off, and I would get another one.
An endless cycle, a dead end.
Actual Ace Cash training manual for employees featured a diagram which starts with the customer applying for an Ace loan, moves through them spending the money on that loan, being unable to pay it back, and then being forced to apply for an Ace loan again. You'll notice that has a certain roundness to it. It's basically a recycling symbol for human misery.
Recycling symbol for human misery. That's powerful, eloquent humor. How many of you were familiar with payday loans, the crazy high interest rates, and people who get impacted by it? How many of you are familiar? Show of hands, please. A few of you. Okay, so for others, this is a prevalent problem. And if I have one goal for this talk today, it is to invite you all to build an equitable financial system for billions. We have spoken about utility, we have spoken about regulations all day today. The technology that we have in our hands today is powerful. It is impactful, but we need to use it the right way. And it has the power to impact billions. So this talk is an invitation to you all. So let's dive in. We're going to talk about stablecoins as programmable money, specifically USDC and how it's functioning as programmable money. So because the idea has been around for a while and it has been used in different ways, this is one way we think that we have proof points that stablecoins are working as programmable money, and specifically USDC. So we're going to talk about that. Then we're going to talk about the lending markets as a sample use case. How big is the opportunity ahead? Payday loans as one case study, and Sam is going to chat with us about how he's solving this problem you just heard about with Zebec. And then the Circle platform for developers, which I'm so excited to share with you all. So the fundamental characteristics of programmable money. The first one is, this is table stakes, it's stability, right? You walk with $5 bill in your pocket, it has to be exchangeable for $5 worth of service, regardless whether you do it today, in 3 days from now. So volatility is the enemy of stability, and it's the enemy of cash. So that's table stakes. USDC is backed by, as most of you know, cash and cash equivalents, short-term treasury bonds, ensures that it is always redeemable for $1. That's table stakes. Any entity that is issuing a stable coin, if you're going to use it as money, on a regular basis, it has to be trusted. And Circle's providing that transparency with monthly attestation reports. Super critical. And this is what makes USDC the most reliable stablecoin that's out there. The utility of stablecoin has to be like cash, but when you are away from other people, right? Like cash is, you exchange without an intermediary, its value is constant. So this is all table stake stuff. USDC is providing that today. Once you have established this construct of a stable coin that is redeemable always at par, then you need to make it accessible to billions around the world and make it usable in as many ways as possible. And that's where we have programmability. So that is the second construct that blockchain now provides us that was not available earlier. The reference to programmable voice and SMS goes back because before, SMS and voice were two fundamental analog units that were on the telco infrastructure. And then the likes of Twilio came about and created a programmable layer on it. And WhatsApp overtook the global SMS volume within 3 years as an OTT app. You got use cases like two-factor authentication, Uber, all of them use Twilio behind the scenes. So the utility of a programmable asset that was analog earlier but now is programmable is immense. Because it benefits from, the composability is what enables you to use it in a variety of ways. The availability is that of the internet, right? And fast and speed, again, these are all characteristics, fast and cheap are characteristics of the internet. So the fundamental constructs of programmable money are around stability and programmability combined into one. And that is what USDC provides us. Now, how do we know that it's working? We know it because there are 4,000 plus businesses that are built with USDC today. This number is not very widely known. It's crazy. It's 4,000, more than 4,000 businesses are enabled by USDC today. These span financial services, NFT marketplaces, gaming companies, e-commerce, betting companies, charity, payroll, remittance, lending, numerous other use cases. Ecosystem.circle.com is a catalog of a very small subset of such businesses. If you are building with USDC, get in touch, go to that website, submit your business there. It'll be discoverable by millions. That's free marketing. Now, how big are some of these businesses? Like, the numbers tell a really clear story. USDC is the fourth largest asset, crypto asset, 50 billion plus in circulation. It is not concentrated in the hands of a few. There are 1.5 million wallets that hold USDC today, and the number is growing. The number has actually grown by thousands more than the last time I wrote this number here. It's a global phenomenon. USDC can be used in 190 countries. It's not sitting static. There is more than $4 billion of daily transaction volume. It is exchanging hands. And $6 trillion of on-chain transactions. It is equivalent to the total digital commerce volume globally in 2022. So it should give you an idea of like how big the USDC ecosystem has grown. And these are all proof points of USDC as programmable money. Now, here is my favorite statistic, and this comes from our chief economist Gordon Liu's paper on stable coins, which was released like a couple of weeks ago. So what you see in this graph is the correlation of different stable coins with ETH trading volume and price. So if you see whatever you see above the x-axis or the zero axis, it means that USDT, DAI, BUSD, UST, these are all correlated with the movement of crypto trading or ETH trading. What that tells you is like their utility is more correlated with trading volatile speculative crypto assets than it is with a broader set of utility that can be delivered to people. USDC is the only coin that is negatively correlated to it, which means that the market cap of USDC is not affected by volatile crypto prices. So this is a very careful statistic which shows us that the utility is beyond trading assets that are volatile. That's a stray animation. All right. So if things are going well, what is our opportunity ahead, right? Like, we are not even 0.2% done. The M2 money supply in US is basically all the liquid supply that exists in banks and is in the economy. And we believe that a large portion of that can be served by USDC in one way or another. USDC right now is 0.2% of the 20 trillion plus M2 money supply. So we believe like the opportunity ahead of us to build is huge. And when we think about the payday loan industry, it's a very, very small sliver, but it's still a sizable industry. So the John Oliver clip that you watched earlier was from 2011. You would have imagined like that time the industry was $9 billion. After raising awareness about such a predatory lending problem, which is affecting 1 in 5 Americans, 1 in 5 working Americans, there would have been something done about it. But guess what? The industry has become 4 times in size. So it's $40 billion now. And the downstream implications of this industry, where people take one loan, and then to pay it, they take another loan. 80% repeat loans within 2 weeks of taking out the first one is $250 billion is the cost. Because this is what leads to additional crime. This is what leads to healthcare costs. These are all borne by us as taxpayers, right? So this industry is predatory. It needs to be disrupted. And I'm super excited to welcome Sam Tapalia, founder and CEO of Zebec. Sam, come on up. Where are you? I don't see you. There you are. Thank you. So Sam is building Zebec, and he's going to tell us a ton about it.
Yeah, thank you so much. Thank you so much for having me.
So Sam, just tell us about yourself first.
Yeah, no, I'm Sam, founder of Zebec. I'm from Nepal. I came to States 5 years ago. Grew up in Civil War, didn't saw a computer. All the things that you promise in crypto and DeFi, all that stuff, that is me. Like the third world country guy who never saw a bank. That's me. I started a few companies when I was in high school, when I was in college, and last year I started Zebec.
What specifically prompted you to start Zebec?
So in my previous company, we had like few developers and we were paying people, right? And you know, like we had like such a small family type experience that one day we were just thinking like, look, you guys are working for 14 days and you're getting your pay in day 17. It kind of really didn't make sense because the company had the money and they were just waiting to get their pay. And after researching a little bit bigger, we figured out about this whole payday lending world, right? And we saw how people who are at the bottom of the socioeconomic hierarchy were victim of this horrible industry called payday lending. That just was like a calling for us, and we started Zebec.
Wow. Yeah, it was very interesting to learn that the root of the two-week payroll system actually is in 1930s. So we are living with like decisions and the infrastructure that's built on from something that was from 1930s. Fascinating. How is Zebec going to solve it?
Yeah, so the fun part about Zebec is we enable continuous settlement payments, right? So that's what Zebec protocol does, and it's a really sexy way of saying instead of sending money as a one-time thing every 2 weeks, we can enable money to go to your wallet every single second. So Gagan here works at Circle. They pay him $1 million a month, so he probably receives $500,000 every 2 weeks. So instead of receiving $500,000 every 2 weeks, now he's receiving that money in his wallet every single second of the day. And for Gagan, it's not really big thing, but for people who are working as an hourly wage employee at, let's say, the McDonald's or Burger Kings of the world, they don't have to wait for 2 weeks to get their $1,200, right? So now they're getting their paid in real time so that for some reason their car breaks down and they don't have to go to a payday lender and pay the $1,900% fee on those very, very small loans.
It's very interesting that more than 95% of the use cases why people take payday loans are actually associated with daily expenses. It's associated with car breaking down, healthcare expense. So even a little bit goes a long way for them to help, so makes sense. Why do you think like direct deposits, fast cash, Visa fast cash, there are existing solutions which promise faster payments. Why aren't they going to solve it?
So I think it's built on, as I said, it's built on the decision from 1930, right? So we have payroll companies that are hundreds of billions of dollars worth. And they have created a system in which for them to have your money as a float in their account, like AT makes a $2 billion a quarter from float. $2 billion, that's twice the money, twice the revenue of entire Ethereum, right? If you really consider it. That's how much they're making just on the float of the money that was supposed to be owed to you faster, right? So these payroll companies, like direct deposit is $5 per every direct deposit. So even if you add like 30 of them, that's $150. So it's already expensive. And there are some companies that are giving you like faster payouts, like early deposits. But the way they do it is they charge you certain fees, right? And those fees are not cheap. So now the consumers are left with deciding which of the two evils we have to choose, right? So, and they are like, I always say that they are greasing the old wheel, we are inventing a new car. So that's kind of the real difference on why they are not able to solve the problem.
I'll remember that, greasing an old wheel versus inventing a new car. Yep. Sam, what is your biggest challenge today?
Yeah, so in the US, almost trillions of dollars of payroll is processed, right? And the fun part about US is every single state has their own law. So some state, there's no clarity if you can actually pay people on dollar-denominated coin. And the reason is back in like 1980s or something like, sorry, not in 1980s, like late 1800s or early like 1900s, people with a like big farm were paying people in farm bucks. So let's say Gagan has a big farm and I work in his farm and he's like, you know what, Sam? You are owed 7 Gagan bucks. And they were having their own like economy and the US government like, hey, you cannot be creating your own money. So that's why in a lot of states, those laws still exist, right? So we don't have the regulatory transparency on whether we can use USDC to pay people or not. And the other big challenge we have is because certain stablecoin went out of business, people are scared about holding stablecoin, right? And the recent crash has kind of scared people of yield because our real vision is not just enabling you to get paid by the second, but enabling people with low-income household to access DeFi and to be able to get yield by the second, right? That's where the real opportunity starts coming in. And there's no regulatory clarity around there. And the most important part is because we are in this weird world, or not even world, exciting world, I would say, between compliance and crypto and payments, there are KYC, AML, KYB, all this different API that we have to use all together, right? And half of our time is spent on that and just praying to God that it does not break in front of our customers. So those 3 things are a major challenge for us, and we're trying to solve it every single day.
Wow. Yeah, we are excited to partner with you. We are excited to partner with you. We are working on those similar challenges, and that is where the regulatory clarity, a compliance stablecoin that instills trust in people, that is going to be so critical.
Absolutely, yeah, no, that's kind of like what we're really excited about Circle, right? Because, we consider ourselves like basically the one who's going to make USDC big, right? Because let's say we do 10% of US payroll, we're not sending millions, we're not sending billions. It's going to be almost like $500 billion of money, being used, right? And that's when the real interesting use cases of USDC will start coming out, because then a lot of transactions will start happening on chain. A lot of these real DeFi protocols will start to see real use cases, because it's real users' money. It's not people chasing yields from one chain to another. It's people's day-to-day saving. It means
right.
it starts becoming real. The imaginary money starts to become real with USDC.
Mm-hmm. Sam, last question, and this is for all the builders out there, right? Like you're building this company, and you're also servicing a sector that is probably not that tech savvy.
Yeah.
What are the lessons you can share with the team here about acquiring customers? How are you going about acquiring customers? You shared a pretty unique strategy.
Yeah, of course. So one of the things we learned very early on was, look, crypto and Web3 is the fastest growing industry. Everyone talks about it, right? But there's no real volume. The real volume still is in Web2, right? ADP processed trillions of dollars, and other companies are like that as well. So even if you get the 100% market share of crypto, you don't have that much of volume. So you still need to go to Web2. So for us, that was actually our big strategy. So we are actually going after mom and pop shop, small companies with five or 10 people working in their businesses, right? And the way we are projecting our strategy is we are doing almost a roll-up strategy with actual smaller payroll companies. And for the employers, it's a great idea, because all of a sudden they are able to enable this equitable payroll product to their employees, and we also have a treasury management solution. So all of a sudden they are able to get access of this amazing treasury management solution, and in the other end, the employees are receiving money by the second. I don't think anyone will be like, you know what, I don't want to receive my money faster. I want it to come in 14 days. So that's kind of our strategy. We're trying to create a win-win strategy on both sides. So the employers are happy because they're able to access this amazing product, and their employees are happy because they are receiving their money faster, cheaper, easier.
Right, so the employers and you mentioned earlier that employers are using really dated systems, so they get a modern system to work with. Got it, and the employees get paid faster.
Exactly. It's so some of the example is people, let's say, because one of the biggest problem in payroll is taxes, right? You miss taxes. The data system, the way it works is even if you miss those, you are not going to realize this today. You're going to realize this in 14 days from now, and then you have to pay fines. So that's kind of and for them, if we were offered, like what we are offering is a digital, faster, cheaper, easier, and not just that, it's right there, it's in real time, right? And if they want to ask a question, probably the CEO of that company is ready to answer them anytime. So that's why they kind of love using our solution.
Got it. Sam, thank you so much. We can't wait to see what you build. And this is great to have you.
Awesome.
Sam,
Thank you so much. It was great being here. Thank you.
So hang in. We still have 20 minutes to go. And where do we go from here, right? So the interesting part is, the interesting part is that the payday lending industry is actually, it's not just these problems we are talking about are not isolated only to the payday lending industry. The lending market itself is $16 trillion. And payday lending is like one use case that stands out and that hits home so much because the impact is so disproportionately felt by people who need support the most. But the problems are prevalent across the board in all lending. The headlines over here are pulled from within the last 6 months. Wells Fargo sued for discriminatory lending practices. Navient settles $1.7 billion with students for student loan malpractice, and more. And you can just Google and see many more of these. And the main thing that stands out to me, at least, is that open source code especially, has no bias. So that's where like the equitable system can be built with smart contracts that are composable and applications that are open sourced. And there are a lot of applications that are being built. So we are seeing proof points in the market. The graph you see over here is from Goldfinch. So probably the font is too small, but there are like 20 plus countries where Goldfinch is actually finding businesses that need money and are enabling accredited investors to lend money to them. And their credit history is getting built on chain. It's a global credit history that is getting built on chain that'll enable lenders anywhere in the world to lend money to borrowers anywhere in the world. It's making capital more accessible. It's making capital move much faster. Faster settlement, lower cost settlement is actually going to help remittance. We already heard about payroll, talked about lending to other countries. The future could be very, very bright. People get paid every day, every hour. It's flexible. You can send money worldwide like WhatsApp. That's been the promise. It's been talked about a lot. MoneyGram is building remittance on Stellar. A fair universal lending marketplace, that's something I'm deeply passionate about. Goldfinch is actually tackling this exact problem. 100 million has already been deployed by Goldfinch. And overall, a transparent global financial system with universal lending rates. So this is something which we have a line of sight to. So how would we get there? Now, there are some challenges that are facing the industry. There has been ample conversations around regulation, so I'm going to set that aside. There are very qualified people working on it. I care about building Web3 businesses and applications, and that is very hard today. The reason that is hard is because, first, the developers are learning a completely new technology paradigm. It's fraught with negative headlines. There are security holes everywhere. The best practices are not known. If players like Wintermute can get hacked, then it scares developers away from handling real money. There's fragmentation in the ecosystem. Which chain to build on? How do you interact with wallets? How do you manage private keys of users? How do you build a good user experience? The answers to these questions are not clear. And then when you are building an app, let's say you want to build a business on that app, which is what will attract the developers, the compliance requirements still need to be met. And no wonder we have 1,000 times lesser developers in Web3 than in Web2. So as of last month, 20,000 developers committed code to Web3 projects. 25 million developers committed code to Web2 projects. As we make development easier, there is going to be a shift. That small sliver that you see in that donut chart is going to grow. And as we start building now, when the regulatory framework becomes clear, those who are starting to build now, this is a great time to build. Those who are starting to build now will have the head start. So as I promised you guys earlier, I want to share an opportunity with you. It is the opportunity to build together. And we are doubling down on it. So let's look at some of the key jobs that make a dApp successful. These are some of the fundamentals. Not the only ones, just the fundamentals. People who don't have crypto today, they walk around with fiat. You have to give them an easy on-ramp. So get crypto from fiat. You have to enable them to store the digital assets securely. You have to instill confidence that their assets are secure and it's safe to use crypto. These crypto assets are going into wallets. You need to make wallets really easy to understand. The user experience with wallets needs to be improved a lot. As a company, if you are handling crypto assets, if you are issuing crypto assets and getting tokens, getting paid in crypto, you're building a pool of capital that is in crypto. How do you invest that capital? How do you pay with that capital to your vendors? How do you transfer these assets or invest them? You need to figure that out. And then, let's say you have product market fit and you want to scale your business. How do you do it cost effectively? Do your infrastructure costs balloon as you add a new user? Does your customer acquisition cost keep going higher as you add new users? And then how do you protect your business from hacks? We just talked about, like $1.5 billion was lost this year on hacks. How do you protect your business from it? And the stack diagram you see is like the number of options you have, permutations and combinations in each part of this problem space. How do you know which is the best option to pick at any given point for your use case? So we have been thinking about these problems at Circle as well. And we are so excited that we are extending the APIs that we have into a full-fledged developer platform. So what will this platform do? This platform will allow you to step-by-step solve each of those problems with managed nodes, secure custody, programmable wallets. And you can build things like payments experience, financial services, gaming apps, DeFi apps, connect to DeFi apps, build an NFT marketplace, embed wallets into e-commerce applications, and so on. So I'm excited to show you a few highlights, a few capabilities of this platform. It all starts with accessing the number of chains, like we believe in a multi-chain world, accessing all the chains that are out there, not all of them, but the major chains that are out there, as easily as possible. So we acquired a company, Sybavo, and they have done a phenomenal job. A huge shout out to Paul Fan, who's the founder of Sybavo. They have inbuilt support for 40+ blockchains, and they're managing the node, and they're a part of Circle now. So the Circle developer platform is going to be managing nodes for 40+ blockchains, and you have access to 1,500+ tokens instantly the day you sign up with a developer key. So what does that enable you to do? It enables you to mint and burn smart contracts. It allows you to mint and burn NFTs, custody NFTs. You can bring your API keys from third-party exchanges and easily move money between exchanges. You can participate in DeFi and stake your assets, and all of this from one managed platform. That's powerful. Once you have access, you need to handle assets securely. The Sybavo stack is built by world leaders in crypto security. So you get access to secure, non-custodial, multi-party computation wallets. There is no single point of failure. The private key management is taken care of. The standard practices of multi-factor authentication are built in. What you're seeing over here is an example where there's a companion app where you can approve wallet creation, approve transactions. There's role-based access control, which is an enterprise with a very familiar enterprise-grade feature that's built in. Threshold monitoring means that you can programmatically assign thresholds for each transaction. That way, even if a certain wallet gets hacked, there's always an upper cap to the amount that can be withdrawn at a time. Identity binding means that you can assign specific user roles to each wallet. So a specific user can only withdraw or deposit into a specific wallet. All of these are available as a part of this platform. So let's say you got access to blockchains, you are integrated, you have managed nodes, you can store your assets securely. Now you have users coming in and you're spinning up wallets. You need to be able to operate these wallets programmatically. The platform supports purpose-built wallet types. What does that mean? There are wallets that can be generated only for deposits, wallets only for withdrawals, delegated wallets for in-game participation, lending assets. There are APIs for cash flow management, scheduling batch transactions, and this is like a powerful wallet ops paradigm. Jordan Forsman, shout out to you for coining that term. So we actually support wallet ops out of the box. Along with the APIs, this is all possible also through a managed console that you can learn easily with. So we covered so far access to blockchain, secure storage of assets, and then operating wallets programmatically as you scale. What about building secure wallets for your users? There is a wallet SDK, which is like a white-labeled functional iOS and Android wallet that is available when you build on this platform. It's a client-side SDK, which has support built in for these tokens. And you can rebrand the SDK, you can rebrand and very quickly spin up a user wallet. So let's say if you're building an NFT marketplace, or if you're building an e-commerce app. People use e-commerce apps on their phone. People use games on their phone. Any game developer, any developer, Web2 developer, or a mobile developer can actually easily integrate crypto wallets now into their app. They don't have to worry about managing private keys. Private key management is abstracted out, and it's taken care of by the platform. Support Web2 style SSO recovery. So this is like bringing the power of Web3 to Web2 developers and really improving the client-side experience on mobile apps, bringing crypto to mobile apps. I'm super excited about this feature. So you have, again, let's recap. So you have the access to blockchain. You can securely store assets. You can operate wallets programmatically. You can build a client-side experience. You have a full stack solution, and now you want to actually scale your business. You'll need to protect your business. How do you do that? The platform has inbuilt anti-money laundering monitoring. It has support for KYB, so know your business, know your customer credentials. It is trust compliant. And there's a protocol by Center, it's called Verity, and this protocol has a set of issuers and verifiers that can come together and issue a credential that can be stored in the wallet. And that is like privacy preserving, but also ensures that if you're building an app or a business, you can be compliant. Support for the Verity credentials is going to be built into the platform. Here you see a demo. We are going to have like a full-fledged demo for this on Friday. So all the developers out here hang in on Friday Dev Day. You'll see the demo with TrueFi, where you can connect to a MetaMask wallet. Circle will issue a credential to you, which satisfies the TrueFi's KYC requirements, and you get the decentralized identifier that gets stored in your wallet and allows you to participate in DeFi through TrueFi. So this is just one example, and we are so excited to bring the KYB support as a part of the platform to unlock business growth, not just app growth, but business growth. So overall, the Circle Web3 services platform is cost-effective because all the node handling and scaling is abstracted out. It's secure with MPC wallets built in, private key management built in. So it enables you to operate with confidence, build an app, build a business with confidence. It scales easy, it is compliant, and it vastly accelerates your time to market. So let's look at the jobs that we had started with for the developers, right? Like, to start with, you want to have get the crypto from fiat. Circle's payments APIs that exist today already help you with that. You want to store digital assets securely. The Saibawa custody as a service, served as a part of the Circle developer platform, is going to be available to you. You want to receive payments from users. The checkout APIs, this is going to be announced tomorrow as well. So hang tight. There's going to be a lot of exciting demos. Be there for the talks. You'll see how you can easily get payments, crypto payments from users. Invest, pay, and transfer in assets. So integrated blockchain ecosystem. We have the 40+ blockchains integrated as a part of the Saibawa platform, and they allow you to easily bring your exchange, the support for bringing your exchange keys and participating in DeFi, easily transferring money, that exists as a part of this platform. So securely investing and paying or transferring assets is supported. the wallet ops paradigm with with APIs for programming custom wallets that allows you to easily manage user wallets. And you can scale it cost effectively because of the managed nodes. We talked about that. Finally, you protect your business because of the KYB, KYC, trust, AML compliance. So it's a full stack solution for you to not just build and adapt. It's a full stack solution for you to build a trusted, scalable business. And that is what we are here to do with you.